Over the last 3 days, over the last three previous videos, classes, we have looked at different things in trading. We've come far. We've started from the very definition of trading, the meaning of trading, what exactly it's all about, how to get involved in trading, create accounts, brokers, the terminologies used, the necessary apps. We've talked a lot, right? So, and I've told you what works, how it affects prices, blah, blah, blah. All these things are important, but I know by now you're already asking me, show me how to make money in trading. I'm sure by now you're placing trades on your demo account, placing a buy, a sell. Sometimes you are right, sometimes you are wrong, right? But the goal is for you to be right most of the times, right? You want to be right most of the time, and the only way to do this is analysis strategies. And that is what we'll be doing in this video. I'll be showing you strategies and analysis that you can use for trading. Okay, that is the right way to make money. You'll be able to analyze, find out the exact direction of the market. And I'm going to do that. So there are basically three types of analysis in trading. We have fundamental, technical, not technology, and sentimental. So fundamental is basically about news, looking at the news in the market and the exchange rate, the political news, financial news about unemployment, employment rate, NFP, CPI, and the likes. These are major news that we trade in Forex, right? So everything is about fundamental. So that is it. We have sentimental analysis. This is basically you checking how traders feel. This is not that important, it's barely used, right? But it's just checking how the market is accepting the information. Because when you get how the market is affecting the information, the forces of supply and demand can influence the movement of the market, right? Then we have technical. Technical analysis is the most common, is the most used, right? And technical analysis is the framework in which traders study price movement. It's all about the things happening in the chart, right? That's what technical analysis is all about. It's about looking at what the market has done on the chart, the movement of price, and use that to predict the future movement. Okay, predict the potential movement of the market. So it's all in the chart, right? So we can go on to argue about which form of analysis is better. I'll tell you the best one is to be able to combine them. If you can find a way to combine them, you will be able to make a lot of money in trading. And that is what we'll be doing. So for when it comes to technical analysis, there are different ways to do it, but one way is to use Forex indicators. So as you already know, I'm going to be talking about these slides. I'm going to be explaining some things about analysis strategies, and then we'll go to the charts. We'll do some simple analysis, right? So let us first of all discuss about Forex indicators and how you can use them. I'll show you how to use Forex indicators on the chart right here in this video, as long as you stay to the end. So before we dive in, I want you to do the YouTube business. I need you to do the YouTube business. The YouTube business, I'm sure you know it. You need to subscribe to the channel if you haven't. Turn on your notification so that you will not miss anything we'll be talking about, right? Because I'll still be posting more videos on this channel, right? I don't want you to miss anything in this playlist or anything, okay? If you have failed to watch certain videos in this playlist, I will advise you to check the link in the description. You will see the videos you've missed. Any video that you've missed, maybe the first video, the second, or the third, I'm going to include it. Or you can just check the playlist. You are going to see it from the beginning. I've aligned them in a way that you cannot miss it. Check that out, right? With that being said, let us go on. So I believe you've done the YouTube business. Let's dive in. So Forex indicators, they are certain tools that help you in your analysis, okay? They help you to make informed trading decisions. I'm going to show you how to add these indicators. That will be the thing we'll be going deeper into in this video, okay? Now, the use of Forex indicators, they are used as trading strategy. They were created because some expert traders, they found out that they need to make things easier for their students, and they went on to create on certain indicators. So I'll show you some major, because there are thousands of indicators. I'll show you some major ones that you can focus on, and you will do that and use it to trade. So you use Forex indicators to create an edge in the market, also as a confirmation tool. There's some help in setting perfect entry and exit points. Indicators such as Fibonacci, the Fibonacci extension, the Fibonacci retracement, there are some indicators that are used. Okay, so these are the categories of indicators. We have the trend indicators, the momentum indicators, the volatility indicators, and volume indicators, right? So there are so many. However, some traders do not use indicators to trade. But what I do is I will teach a lot of these things, and then you will go on to decide which of them you want to trade with, right? So indicators are not best used alone. I need you to put that down. Indicators are not best used alone. They are best used when combined with other trading strategies, right? Whether it's a price action or SMC or ICT or triangle of analysis or precision flow method. When combined with other strategies, other ways of trading, that is when you will see the best out of indicators, right? So that being said, now these are the categories: trend indicators, momentum indicators, volatility indicators, then volume indicators. Okay, so let's go on. So trend indicators. Now the goal of this trend indicator is for it to indicate the uptrend, whether uptrend, downtrend, or consolidation phase, that sideways movement in the market. I already talked about this in the previous videos. I mentioned certain trends: that's uptrend, downtrend, that's bullish, bearish, and sideways trend, right? So some of these indicators could help you identify them. We have moving averages, the simple moving average, the exponential moving average. We have Bollinger Bands. It can also help you, right? So that is just it. Now let's move on. We have the momentum indicators. They are used to measure the rate of change, the speed of the price movement, right? It's telling you whether the market has a lot of momentum. You have to gauge the strength of that currency pair or financial instruments. It could be for synthetic, it could be for commodities. They are used to gauge it. Okay, they are used to gauge the strength. Okay, so some examples are RSI, Relative Strength Index. RSI is best used for trending market. We have stochastic is best used for sideways market. Okay, then let's move on to the next category. We call that the volatility indicators. So they are technical indicators. Obviously, indicators are under technical analysis, right? So they are simply going to let you know where the market is going next. Okay, what is going to happen. Now, they do not work so well. These indicators, they are not 100%, right? They're not 100%, which is why I said it's best to mix it with other strategies, which I will still cover, okay? So they are not best, but it is good to start with them. Indicators are simple to use. That's why we are beginning from them. They are simple to use. We can identify some trends. Indicators are simple to use, and they will help us in the beginning part of our analysis, right? Okay, so that being said, some examples of volatility indicators are Bollinger Bands. You understand? Bollinger Bands. Then we have the average true range, right? So then we have volume indicators. They are just used to tell you if the trend is strong. There are lots of traders on that particular pair. Volume indicators could help you with that, right? So these are some effective trading strategies. We'll not be covering them in this video. In the next video, we'll be covering some things in this place. In the next video, which will be the last video, we'll cover it, place trades and the likes. I'm sure by now you know how to place trades, shouldn't be an issue, but analysis and strategies, we'll cover indicators in this video. In the next video, we'll go a little bit deeper into some of this, right? But I just need to let you know some effective trading strategies. We have price action, we have top-down analysis. I do not include trading like the bank, but that is one of them. Trading like the bank, like the financial institutions, right? We have the PFA triangle of analysis. We have the SMC, the ICT method. We have the LTA. These are also very important, especially for your exit, for your take profit positions, right? We have the entry confirmations, because before you enter a market, you need to confirm it, right? Indicators could do that for you, but there are better ways like sniper entry. Sniper entry is one of them. Fractal confirmations is another one, very important. So we have the precision flow method and lots more. So these are the things I covered in the complete training, in the complete Forex training and mentorship program, which I have. I call it the ultimate trading program. And you can get that with the link in the description. Just check below. you are going to see how exactly you can take advantage of that and get it. So I will advise you get it so you get a proper Forex training. That being said, let us move to the charts, and I'm going to show you how you can easily use certain indicators to your trading. Okay, so we have this right here. So this is a chart, and we could start by adding an indicator to it. I'll call this, let's start with moving averages, just like we said. I can show you a simple way to use it. Moving average. Okay, moving average exponential is EMA. Moving average simple is SMA. So let's start with EMA. Now, EMA 20 is a good one. And right here, EMA. You can check my channel if you want to know how to use TradingView. But I believe you know how to. You can just click on settings. And you click on settings, change the length to 20, right? And it makes a lot of sense. Now, how you use moving averages is very simple, right? First of all, like I said, you don't want to use indicators alone. So you must have checked the structure of the market, the trend, the current trend in the market, right? And the next thing you want to do is you want to take note of the fact that when the charts are above, when the charts are on top of the moving average, it gives you a confirmation, right? When the charts are above the moving average, it gives you a confirmation to buy. When the charts are under the moving average, it gives you a confirmation to sell, right? So that is just what you need to have at the back of your mind. So that is basically how you interpret it. You understand? But like I always said, the structure of the market matters as well. We will go on to add two indicators, so to speak. We could add another moving average called a simple moving average. You can drop a comment below in the comment section telling me what exactly you want me to look at. I could look at something else for you. Understand what strategy you want me to cover, what indicator you want me to discuss, right? Look at SMA 12. Change the color, change it to black, something so that we can easily differentiate it, right? Makes sense. And there we have it, the SMA. Now, if we are using two moving averages, when they cross, right? When they cross, it becomes a good confirmation for us to enter a sell, right? When they cross facing down, you understand? When the cross is facing up, is a good confirmation to enter a buy, right? So this is just how you use your moving averages. Just very simple. SMA 12, 20. I'm going to remove this and use EMA 50. The moving average exponential 50 is a good one. That I know for sure. And it is something that I've played with a lot. And I would advise you use it as well. EMA 50. Let's use 50 right here. Good. And you can see how this works as well. When there is a cross, it is still the same thing. When there is a cross, it gives you a signal. At this point, when there was a cross, you could enter a sell, make money all the way down here. You understand? This point to when it's very close to crossing, it could also be a signal when it crosses as well. You understand? Gives you a confirmation for you to enter a buy or a sell, depending on where it is facing, right? The trend of the market is also important. You do not want to buy in a downtrend. You don't want to sell in an uptrend, right? I could also add that right here for you. Don't buy in a downtrend. And don't sell in an uptrend. There could be exception to these rules. We call them the trend reversal strategies, right? There could be exception to these rules. There are certain zones which we can call demand zones, supply zones. When the market taps into it, it could be an opportunity for you to trade the reversal, right? You understand? But as a beginner in trading, you don't want to do that. You have not yet gotten to that stage. You've not yet gotten to that stage to start to trade reversals, right? And if you want to learn more, if you want to get better in strategy and everything, you can check the link in the description to get a complete training in Forex with mentorship, the ultimate trading program, right? That being said, in the next video I'm going to make, I will cover more on strategies and how you can use them. But I want to do just one more indicator for you, called out the RSI, Relative Strength Index. Now, very important when you search on your trading view to get these indicators, do not get from the community. You can see from the community there are so many scripts, so many. It keeps loading more and more. It keeps loading, keeps getting bigger. Like I said, there are thousands, maybe even millions of indicators on TradingView. These ones on that community, they are made from traders like you and I who are trying to make it famous. They've done some changes, right? They've done some changes. Maybe it's good, maybe it's not. I don't bother to check. There are so many. So which one do you start from, right? So, but what I usually remove is from favorite. So this is it, Relative Strength Index. Take it under technicals. Relative Strength Index. It might not be under favorite from you because maybe you've not made it under your favorite, right? So take it under technicals. You see it right there. Under technicals, Relative Strength Index. So when you click on it, it comes up, right? Click on it, it comes up, and the Relative Strength Index, it comes in this indicator window. We call this an indicator window because right down here, so Relative Strength Index and some other indicators like MACD, it shows down here, right? So that being said, you can click on the settings to change the color, although I don't advise that, just leave it. Do not go about changing this length or the SMA because it also has a moving average inside it. You don't want to bother about that, right? Now, first of all, you have to note what we call the overbought and the oversold region. The overbought is anything that is above 70 is overbought. Anything that is below 30 is oversold, right? However, you don't want to just focus on trading overbought, oversold region as a trader. You don't want to do that. You don't want to just focus on that because there is a very common mindset in the traders community that once the market is overbought, you should place a sell. That doesn't work most of the time. For example, at this point, it was overbought. If you had placed a sell, you would have lost money because you kept on buying, right? So that is the first thing to take note of. So once the market is overbought, like I said, you want to also check the trend. Is the market now coming down? Okay, when it starts coming down alongside with the fact that there's been a cross within these two lines, it has crossed a crossover within these two lines coming down, then you can put a sell, right? So at this point too, when it is overbought, there's been a cross, you understand? You can put a sell coming down, right? Very, very important, and then hold that sell down there, right? So the same thing when it is oversold and it faces up and there's been a cross. When it's oversold and then it starts going up, it comes back into this band facing up, there's been a cross, then you can go on to buy. Remember, it has to be in an uptrend. Okay, very important. So these are certain tips and tricks that you can use with indicators to make it work better for you, right? So in the next video, we are going to dive deeper and talk a bit more on market structure. And market structure as it is, what exactly is happening in the market before you can even place a buy or a sell. So I hope you've been able to learn a thing or two in this introduction to strategy video. Like I said, you've probably been doing it wrong, but right now you have a good idea, good basic knowledge on how to begin everything. So we'll be diving deeper in the next video. So stay tuned. And once again, if you've not subscribed, please do that and drop your questions. What next do you want me to talk about? You can drop it in the comment section. Check the links in the description. If you want to just dive in straight into the ultimate trading program at once, please do that. Check the link in the description and you'll be able to get access to it. So thank you so much and stay tuned.